Good morning and welcome. In just a few hours, the Finance Minister will be presenting the Union Budget. That's at 11 a.m. this morning. This is one of the most anticipated days of the year in Parliament and in a sense sets the course for the entire year. Now, it's been an immensely difficult 2 years. India, like all other countries, has suffered a lot because of COVID. But is there a light at the end of the tunnel? And is that hope tenuous because there lies immense uncertainty at so many levels? Now, according to the economic survey presented yesterday, India will see an economic growth rate of 8 to 8.5% for the coming fiscal year. That's down from 9.2% growth estimated in the current year. Now, the survey says almost all indicators show that the economic impact of the second wave in the first quarter was much smaller than that experienced during the full lockdown phase in 2020-2021, even though the health impact was more severe. Okay, I'm going downstairs.
Has pegged India's growth estimates next year at 8 to 8.5, which is far lesser than the IMF's recent forecast of 9%. The government's top economists say this is because of factors including high inflationary pressure and the international crude prices. While this year the economy is expected to grow at 9.2%, it has actually only grown 1.3% above the pre-pandemic levels, because the recovery this year is on the back of the sharp contraction in the first year of the pandemic.
The economy this year is estimated to have grown by 9.2% after a contraction of 7.3% in the previous year. Overall, GDP is 1.3% above where it was pre-pandemic. This is in line with what we saw calculating from the GVA perspectives. There's going to be very likely a withdrawal of global liquidity by major central banks. Capital flows have been so strong that we have a very healthy balance of payments surplus. Even with our more conservative forecasts from the economic survey, we would still be the world's fastest growing economy.
India is expected to be the world's fastest growing economy, with both agriculture and the industry showing signs of strong growth after the lockdown. The challenge would be to keep up this pace. With Sakshi, Sunil Prabhu, NDTV.
All right, well, we've got a wonderful panel today. We've got Ashwajit Singh, Managing Director of IPE Global Limited, Rajan Bandelkar, the President of NAREDCO, Sanjeev Bajaj joins us, as does Sanchita Mukherjee, PKD Nambiar, Dr. Darshan Pal, President of the Krantikari Kisan Union of Punjab, and Anshul Avijit, spokesperson of the Congress. Good morning to all of you. Thank you with us. Mr. Bandelkar, how much is what has been projected in the economic survey premised on certain conditions outside India, and also premised on the fact that, COVID is essentially going to go away?
Thank you, Vishnu. See, COVID was really troublesome for all the sectors of the industry in India and all over the globe also. But to be very honest, real estate was blessed thanks to the government, state governments as well as central government. Everybody stood by this industry. Thanks to the laborers who walked on their feet when COVID was there, so it attracted, and thanks to you people also on media who have projected all this. So the industry which was not given the desired importance, that was suddenly came into limelight of all the decision makers.
Right. But
basically I will tell you,
yeah,
this is one industry which sorry?
I'll just come back to you in just half a second. Sanchita, let me come across to you next. Now, the economic outlook, let's just start rolling a couple of those graphics. The first one about what exactly has been projected. It is a conservative projection according to the government. Let's have the GDP graphic up first, which will India seeing an economic growth rate of 8 to 8.5%. But let's, while that itself looks fairly impressive, the fact that it is, if you look at the normal growth path, and I really do need that graphic, right? Sanchita, comment on this a little bit. Now, we are down substantially. It's now climbed back up, but compared to where we would have been had the pandemic not happened, there's still a significant 12% odd shortfall. So I think the question is this. We are back on the path of recovery, but if you just take this 8.5% GDP growth, it seems much more impressive than what the reality is. It's back up from, it is back up, but it's back up to just about pre-pandemic levels. We missed 2 years of growth the way we would have wanted it.
Thank you, Vishnu. Quite right. But however, I would like to point out, last year's contraction was touted to be minus 7.3%. However, it has come to minus 6.6%. So what we forecast actually, given all of these figures, for all this fiscal year 2022, we might end with a slight upside, which we have not accounted for because the contraction was slightly lesser than what was projected.
Right.
So that's one point. So there's a spillover. There is still money on the table. However, I think this year's union budget is being prepared against a backdrop of extreme and extraordinary uncertainty. I mean, if you look at things globally, there's an IMF World Economic Outlook report that has come out that talks about a lot of supply chain disruptions, localized wage pressures, inflation, oil is at $90. So, I mean, even within India, domestically, if you were to look at it, there is moderation of economic activity, right, which is being witnessed. There are high frequency indicators which are showing that they have fallen off the peak, which they were a few months back. Now, last year, if one were to see, it was pretty clear. It was simple and it was cut out that you spend, and you get the economy back on track. There was pent-up demand, which came as a rebound in the recovery. Corporate earnings added to the healthy revenue receipts of the government. But this year is different. This year, the pent-up demand is something that the government needs to focus on this budget because consumption is the key.
Right.
How do you spur or kickstart the economy into consumption? I mean, consumption levels are back at 2018-19, which is not much to write home about. So how do we go about kickstarting this consumption? A very valid point which was raised by my colleague a few minutes back was the real estate sector. For example, the real estate sector has projected a growth. It is a very large employment generating sector. How do you incentivize that? How do you focus more on capital expenditure, which the government has already been doing? How do you go ahead simplifying your taxes? How do you spur consumption? I think these are the very, very key questions because this budget will be focusing on impetus to growth, investment and consumption. That's very clear.
We're also joined by Sanjeev Bajaj at this stage. Thanks, Mr. Bajaj, very much for being with us. Now, I don't want to strike a negative note or anything on a day when we've all got very high expectations. But, if you look at what the Sanjeev Sanyal yesterday, one of the key economic advisors to the government actually said that the economic outlook is based on the assumption that there will be no further debilitating pandemic-related economic disruption. This could well happen because it's not necessarily gone away. This is a virus that mutates. We don't have a universal vaccine which fixes COVID completely. So that is a worry. A normal monsoon, we need probably too early to predict exactly where that's going to go. Withdrawal of global liquidity by major central banks will be broadly orderly. We want that to happen. Oil prices will be in the range of 70 to 75 and global supply chain disruptions will steadily ease. We have a war brewing between Ukraine and Russia right now. Oil prices in the last few months have been all over the place. And COVID, I've just described it. How much of this do you believe is premised on a lot of optimistic outlook that, we need to be prepared for a lot worse?
It is quite an optimistic outlook and we have to be very careful this year because obviously this is related to the pandemic and what are the new variants that will come in, how that will affect and what is the response to them. Like even right now restaurants and a lot of people are suffering due to the 10 to 5 lockdown that is happening at night. So a lot of businesses are not able to operate properly or efficiently. So all those things, especially in this wave which is not that severe, that kind of lockdowns are not required because it does affect people. And as Sanchita made an amazing point that it is all about consumption. It is driving consumption, driving the spending which is important. The second thing is driving the capital formation for the country.
Right.
So these are the two things which need to be the focus. They are things which are beyond your control. Like people are already talking about the great correction has started in the .com, let me call it the app, the boom that had happened and the companies that were getting crazy valuations. Now that is also a risk out there.
Sure.
Okay, whether, how long will that come? Is it just the first jerk? So, there are a lot of uncertainties. There can be huge inflationary pressures. So the government has to now start spending on getting the economy back on track. And obviously that starts with expenditure that gets followed by creating consumption,
right,
by giving people more money in their hands so that they can spend, and at the same time also encouraging long-term investing other than gold and other instruments, so that the money is going into productive assets which help create that, investments into economy and other things.
Okay, lots of points over there. In fact, I wanted to go across to Mr. Ashwajit Singh. Sir, the goal is $5 trillion by 2025. Given what we've gone through in the last 2 years, that seems very difficult to achieve. But large-scale spending has to be a priority of this government. Accelerating investment, accelerating job creation. But if you look at large-scale spending, what is your wish list of where that spending needs to be?
Vishnu, I think you're absolutely right. Let me start by the positives first.
Sure.
When we talk about the budget and we talk about, have we really grown compared to what we were expecting 2 years ago? I think the first thing is we have to be grateful that we've gone through an unprecedented time where at one particular time there was this issue about, survival, whether part of our population would be wiped out, whether the economy would be back on track. So there are a lot of positives in the last 2 years. It's absolutely unprecedented, so we can't really compare anything with that. Now, coming forward to what we're really looking at, to me, expenditure and large-scale spending is a must. We need to start looking at investment in productive assets. We've had a number of social sector schemes which need to continue, because at the end of the day, we have to realize that consumption is still not really back to the pre-pandemic level, so we need to get money in the hands of people. Now, it's easier said than done that we need to start investing into productive assets and which will get us long-term returns. But at the same time, we need to also get money in the hands of people right away.
Sure.
So I would really want spending to be done in productive assets. A lot of money that's being spent in NAREGA actually is not really being used more as a dole out rather than creation of real assets. So I would like NAREGA to continue, but it to be channelized into more productive assets. I'm very keen that we also start an urban safety net, because when we talk about unemployment, when we talk about getting money in the hands of people, we tend to forget that the urban parts of India, which is 1/3 of India, has probably got a larger unemployment than rural parts of India.
Sure.
And when we saw the issue of the migrant labor, we saw how everybody was playing around without really being able to, even know where they're getting their next meal from. So we do need that net.
I take that point, sir.
So I think that's very important.
Sure.
And at the same time, we need to continue some of the social sector schemes. The government is sitting on a fair amount of money. The states have money. The center, the RBI also has money which is not being spent because you're not really getting enough boost in the economy right now.
Just let me interrupt you, because I want to bring across our second graphic, and I wanted to go across to PKD Nambiar as well. So let's have that second graphic, which sort of gives you a bit of a reality check on where we are presently versus what a lot of the targets have actually been. As we try and bring that up, I just wanted to go across, so this is actually the disinvestment target. Now, we've seen the last 1 week being fantastic with the sale of Air India going through. It's now in the hands of the Tatas. But for the last several years, this government has been relying heavily on disinvestment. And we've failed to reach that target, obviously for some of the reasons mentioned. But in the absence of reaching that 1.75 lakh crore target, is any projection really going to suffer, PKD Nambiar?
Vishnu, it has been a challenge from the last, even though the government, of course, both the Vajpayee government were the disinvestment as a policy has come in with a minister in place. This government also had the plan that the minimum governance, maximum governance and the minimum government in the business. That has always been the policy. I think it's a good start that in the last week, as you said, that the Air India has gone. With LIC IPO is coming on board in the next few months, and some of the other public sector companies are going into the public. I think the disinvestment target in this upcoming financial year, the government should be able to. But there is a lot of challenges in that particular step. There is the challenges from the labor unions, and there are some kind of how do you the real valuation what we expect, that the government expects or the public expects from a public assets. So these are things which is taking a little time, and of course we all know that the last 2 years have been not the greatest time to even think like that. Even during this time, if the government could do an Air India privatization or a disinvestment, I would give a lot of credit to the government. On one more part which I wanted to talk, because it's a wonderful panel. So the one thing is very clear, that the economic policy of this particular government has been very, very different from the last 60 years. So don't go by that I'm a andhbhakt, so I'm talking purely politics. The difference has been that generally in the most of the time the central governments have been, irrespective of any government, whether it is Congress or even the previous BJP governments, have been always been talking about this glamorous macroeconomics. But on the contrary, the Modi government has focused making it sure that the governance and also the economics what we discuss here is reaching to the last
No, but PKD, Nambiar, the problem is that while everything you're saying is valid and completely understandable, I think the context needs to be looked at as well. The fact that millions of jobs have been lost in the last couple of years, 84% of households have suffered a loss of income. The rich have gone richer during this entire period over the last 2 years. 4.6 crore people have been pushed out into poverty. India's rank in the global hunger index, it's abysmal, absolutely. So, you know, we can talk all about where the things that we've done, projecting growth and the need to spend, but this is a reality which cannot be denied.
Absolutely. And I would definitely say that the unemployment issue, this is a big issue. In fact, a few days ago, there was a huge discussion wherein I could participate on that. So unemployment, there has never been an absolute clear clarity by any political party or any prime ministers or any, for that matter, any political leadership has never been able to come up with an absolute clean and clear clarity that this is a clear solution we have for an unemployment. But the unemployment issue in India has been, if you really look at it in 2018 and 19, the EPF, that 13.7 million people, fresh people have joined in the EPF. So it is not as bad as what we talk, because in India, we are a diversified economy. We are not just like any
so
other
not as bad as we would have thought. But just 1 second, let's get the manufacturing sector graphic up, and then let's go across to Anshul as well. Let's just, these are live images coming in from the Finance Ministry. A lot of the top bureaucrats in the Finance Ministry, principal economic advisors, chief economic advisors to the government, they're all walking in. Remember, 11 o'clock this morning is when Nirmala Sitharaman, the Finance Minister of India, will be presenting the budget in Parliament. So as we look forward to that, I mean, just a small sense of how things are getting set up. But the manufacturing graphics, let's have that up. So this is the sector which has perhaps been worst affected. If you look at actually where we were in 2019, there's been a drop which is huge. The recovery has been about 12.5%, but you know, the normal growth rate, again at 2019 levels, indicates that we are at a 24% shortfall. Anshul Avijit, respond to what PKD Nambiar said as well, but as you do that, reflect on the manufacturing sector, because that is an immense driver of growth in this country besides employment.
The manufacturing is not picking up because companies are deleveraging at the moment, and they've been doing it for far too long. I mean, yes, private investment is the second biggest driver of growth, but that can't pick up unless there is no demand, and there has not been any demand because of the faulty policies of this government. You know, Mr. Nambiar said that, you know, macroeconomics is all glamorous. I mean, it's only glamorous to people who don't understand it. This government has no clue about macroeconomics. You know what it's been doing, Vishnu? It's been peddling high-frequency data, high-frequency indicators, revenue, the revenue has really gone up, or exports, which has gone up 10%. Yeah, that's good, but, there is apprehensions about that. They're peddling that to reflect the health of this economy. That is completely insincere. 90%, 95% of our labor force is in the unorganized sector, and we simply have no data about that. There has been data coming out from the State Bank of India that the unorganized sector used to contribute about 52% to our GDP, and that's fallen from 15 to 20%. And that's not because the labor force has moved from the informal sector to the formal sector. It is because their production levels have fallen down. They're earning much less, and the jobs they're getting are low productivity jobs. People are not even looking for jobs anymore. So such is the situation here. And you're talking about government spending. I mean, the government is not spending at all. What about the spending in capex last year in the budget estimate? It was about 5.5 lakh crores. The government has spent half that amount. If the revenues goes up and the government does not spend, where do you meet that kind of demand?
All right, PKD, would you like to, PKD Nambiar, respond to some of those points briefly before I go back to my other panelists? Yes.
Firstly, I don't know which data Congress approves in India, whether it is an IMF data, whether it is a World Bank data, or a data which comes from only the Congress headquarters, then nobody can help it. The truth is that there has been a challenge of the last 2 years. It was a global challenge which cannot be just handled only locally, which is anybody who understands basic economics. Today we are sitting in a place which is of maximum FDI investment has come. Right now we are, as we discussed, today we have reached to one of the peak so far in the FDI investment. We are right now sitting on the foreign currency. The reserves have been in one of the highest in today's day. So we are sitting in a wonderful cushion. So the unemployment, as I said, there is no formal data. You can have it. We need to understand the size of our own economy, the size of our people. You cannot simply have a data.
So it's all tardy. It's never coming. Where is the data from the unorganized sector? It's not even there. You don't even trust the CMIE data.
My
dear, the methodologies are wrong.
My dear friend, we had
data is about 2 years old. Even the data on agriculture, on household incomes is so tardy, it never comes. And that is one of the problems of this economy, that you have very unreliable data about majority of the people. It's leading to gross inequity.
Okay, 1 second.
There is uneven growth in this country.
Yeah. May I ask you that we had two governments which led by one of the greatest finance wizard in the country, Dr. Manmohan Singh. Where was all those data? So it is not simply not practical that one is that if government comes up with the data, you.
All right, okay. Let's just move beyond this data point. I want to go across to Darshanpal Singh ji as well. Dr. Darshanpal, how, given the importance of agriculture, particularly with the elections just a few weeks away, do you expect a large number of incentives in the agriculture sector? Because the agriculture sector, despite so many problems over the last few years, has been fairly solid and has showed fairly sturdy growth. But obviously it needs to go up much more.
Vishnu, this sturdy growth of the agriculture sector was mainly due to the farmers. They put their labor, they put their every resources in the agriculture to protect themselves for their particular existence, for their children, for their households. But last year they tried to put these farmers' income, farmers' land, farmers' labor and markets for the corporates, which we struggled for. But now the government in the budget should come forward, mainly for example, we were demanding in MSP. For MSP, the government should come very clearly that they should provide some budget for the MSP of the 23 products, of the 23 crops, which they already declared, but they are not being purchased, number one. Number two, the government should come very clearly and with a big budget for the agriculture. For example, in the 86% of the farmers are below 5 acres of land. 2 hectares of land. The government should come with a budget for the welfare of those farmers, for their land to be made fertile, for the irrigation of the land, for the markets. For example, the markets in the agriculture in the country are only 7,000 markets. We need 42,000 markets. As the National Farmer Commission has already said, that a farmer should not move more than 5 kilometers radius. So 42,000 markets are needed. The government should invest in agriculture. So government as a institute should invest into the agriculture.
Sure.
Only then the agriculture can continue participating in the economy of the India.
Okay.
Otherwise the farmers are committing suicides, and suicides will increase more and more, and the agriculture of the India will not be possible to contribute in the economy of India.
Okay, I just want to bring up this next graphic on some of the big dilemmas we face. Perhaps get Sanchita to respond to this. Firstly, the fiscal deficit is a concern, but let's just roll this out and look at a couple of important points over here. Now, what should the budget deficit actually be? Now, inflation is a worry. Let's have that full screen. It's at 12%, the average over the last 6 months or so. The budget deficit is very high at 6.8%. The fiscal deficit in 2021, 2022. So, rising prices versus boosting growth. It is a huge dilemma. So, what is the line, Sanchita, the government needs to take, the finance minister needs to take?
I think what we really need to prioritize at this point in time, addressing all of these issues, which is primarily employment, consumption, all of that, is a parameter known as household debt. In my understanding, household debt in India is still not very high. So it's very important for the government, for the finance ministry, to ensure that there is smooth credit flow to household debt in terms of the depth and reach of the household debt needs to go to each and every household to spur consumption. See, because if you have savings and if you have a certain amount of debt, once you're coming out of the pandemic, it's very, very important that as a government, you can spur this consumption by increasing the household debt, which is still very, very at a very low level compared to other economies, right? For this, the government needs to incentivize NBFCs, non-banking financial institutions, microfinances, all of that. Let's understand today the cost of borrowing is still very low, right? Inflation is still within the 4 to 6% comfort level of RBI. Tomorrow, it's a different story. So while the going is good, it needs to spur credit to reach. And what happens is once the credit is available and consumption happens, manufacturing, all of this benefits, it leads to GDP growth. GDP growth leads to wage growth. Wage growth is a very healthy, organic way of fighting inflation because it is a virtuous cycle of consumption and GDP growth without causing inflation, because inflation is supply chain bottlenecks are already being addressed by the capital expenditure of the government. That's point number one. Point number two, what the government really needs to look at is the traction within the Ayushman Bharat scheme. Now, Ayushman Bharat had tremendous traction, and to be honest, it is today we are at an economy where you have a unique digital identity of 1.3, 1.4 billion people. So, health insurance is an aspect of household finance apart from saving and debt, which everyone is really, really worried about. So, ensuring, giving dole-outs to general insurance companies, ensuring that every citizen of the country comes under the benefit of the Ayushman Bharat is something that the government can also look at in today's budget.
Okay.
Apart from all of this, I think employment, some of the points that were being raised with data and all of that is quite valid, because there's a whole gig economy also at work here. I mean, there was a recent report which I was reading by BCG, which says that, we have a capability of reaching almost 90 million gig economy workers. Mapping all of them and understanding that informal sector, which is essentially like a disguised employment, because they're earning a lot of money.
Sure.
How do you incentivize that sector? It's not just about incentivizing startups and unicorns. There's an entire gig economy at play over here. So understanding that sector, bringing that into formalization will spur consumption and employment.
Okay, Sanchita, I'm just interrupting because these are images of the finance minister leaving her house just now and proceeding, I presume, to the finance ministry first before she goes across to Parliament in a couple of hours from now. So I think that That's Mrs. Sitharaman over there in her vehicle as she leaves her home. It's a big day for her, having to balance the economy, having to stimulate growth at a time when we've suffered so much. So that's interesting. It's all starting now. It's all starting now. We shall know what lies for us. But before I take a break, I just wanted to get a quick couple of comments, perhaps, from you first, Mr. Bandelkar, on something which millions, across the country, I suppose everybody watching this broadcast would want to know. Will Mrs. Sitharaman tinker with income tax rates? Can she afford to do so? Can there be, for example, any hope that the exemption limit will be raised? Your views on that?
See, people want income tax rates to come down, but I don't think the current situation will allow the government to do that. But as I am from the housing industry, what I would request and what we want and what we have requested the government is that when a person takes loan, whatever interest he pays on the loan, there's only a 2 lakh rupees rebate on that, Section 24B. See, for the first home, because the government is telling housing for all, and they want to see by 2022, we are already in 2022, home shelter on each and every Indian. So that is not happened yet. So if they really want to do that, for the first home, they should waive off entire interest, whatever might be his loan amount. That is the first thing. Second one is that government has done an excellent work in the time of pandemic. They have given ECLGS, Emergency Credit Line Guarantee Scheme, for all loans whichever were outstanding as on 1st February. So they have given first 20% and then they have given 10%. So 30% of loan amount. That's why today, see, we haven't had the actual effect, or we haven't faced the problem of the pandemic as world over everybody has faced. See, people are unnecessarily criticizing what government has done. See, if government wouldn't have done, we wouldn't have all be on the panel here, and we are all sitting at all different places. See, think the positive thing of the pandemic. See, we can criticize the government, they have done nothing. Before criticizing anybody, we should think what we have done. See, we have got such a new technology. Everybody is sitting at different places, and we are
actually this technology was invented far before the pandemic itself.
But see,
I take the point about the digital economy, which I think you're alluding to, and I think that's a valid point. But I need to take a short break at this stage. We'll come back with a lot more. Just a couple of hours to go for the union budget.